right, welcome back in Live Now. I'm Austin Westfall. Well, lots and lots of economic headlines that we've been tracking over recent weeks. One of the big headlines of the day is sales of previously owned homes retreating sharply in March. Let's send things out to Fox Business's Jerry Willis. She gives us the latest on what we need to know about the housing market.
Housing market gets underway. The National Association of Realtors reporting existing home sales plummeted in March. Here are the numbers. March sales falling 5.9% month to month and even down year over year by 2.4%. The move even surprising NAR Chief Economist Lawrence Yun, who said he had expected building inventories to boost sales, but it was not to be. Barbara Corcoran, founder of Corcoran Group, said economic uncertainty and Trump's tariffs are undermining confidence among potential buyers. Though Trump's announcement of tariffs didn't occur until April 2nd, he vowed to raise tariffs as early as his first day in office.
It's the main card. People don't like to buy in uncertain times. People worry. People at home are worried about their futures and nervous about everything. And the last thing they do is want to make a large commitment to anything. They hesitate.
Meanwhile, Realtor.com noting that the home sales decline occurring at the same time as mortgage rates coming down. According to Danielle Hale, Realtor.com chief economist, quote, these March home sales would likely have gone under contract in February and early March when mortgage rates declined from near 7% to 6.6%. Hale went on to say, quote, the tailwind of falling mortgage rates was likely offset by rising concerns about the outlook for personal financial situations and job security reported in consumer surveys, despite the fact that actual labor market data remained quite healthy. Some good news out of that report. Inventories are increasing up 8.1% month to month, which should ultimately boost sales. Jerry Willis, Fox Business.
President Trump was asked directly about this in the Oval Office earlier today. Here's what he had to say.
Mr. President, on the economy, there was a slowdown as it relates to home sales in the month of March, the slowest pace since 2009. Is that an economic indicator, and perhaps the Treasury Secretary can weigh in on this as well, is that an economic indicator that concerns you about the broader U.S. economy?
No, they had very good numbers on housing today, extremely good numbers, and that's despite interest rates, because, you know, if you look at what happened, everyone said, oh, I said I was going to get prices down, I did. Housing is doing very well. We should lower interest rates, that's the Fed. I hope they lower interest rates. That's a smart thing to do, be ahead a little bit, although already it's a little bit late. But in the end, we just have a great country. We have a very strong country.
So we're going to continue our coverage on this. This is something that we are going to be tracking closely. Standing by is senior economist at Realtor.com, Joel Berner. He's here. Joel, there may be people watching this who don't follow the housing market closely. Why is this news important? Are existing home sales an indicator of larger economic trends?
Absolutely, they are. The housing market is essentially underpinned by the labor market, and how confident and comfortable people feel about their jobs and their income is how they're going to make decisions about buying a home. And so a slowdown like we saw in March is concerning. And I think that on top of mortgage rates, consumer confidence is really what was driving that decline in home sales in March.
So did sales fall hardest in any particular part of the country?
You know, sales have been performing across the country in different ways. A majority of sales are still happening in the South for both existing homes and new homes. But what's really been interesting is the price differential of homes selling in the lower tiers and higher tiers, with the luxury segment really outperforming kind of the starter inventory segment, which is sort of an interesting development and speaks to the importance of mortgage rates, because folks who can afford to buy really expensive homes are often paying more in cash and mortgaging less, while first-time home buyers looking for starter inventory have to rely on mortgage rates at these high 6% rates, which just makes it even harder to afford a home.
I was just about to ask you, and maybe you've already just answered my next question, but what is the main culprit for the sluggish months? If I could put it in my own words, is it affordability challenges?
It's affordability challenges and it's uncertainty. Those two things together are really slowing, a lot of prospective home buyers from getting into the market. People just aren't feeling certain about their own economic prospects, and they're looking around at homes and seeing that there are very few, even though there's more inventory, not as much that meets their budget.
Springtime. Why is it the most popular time for people to buy or sell a home?
Yeah, it's the start of when families tend to move, is kind of the long and short answer of it. As the school year comes to an end, families are more likely to start making a move during the summer. So if they can buy a home in the spring, it makes a summer move a lot easier. So it really just comes down to lifestyle as much as anything else. But in a lot of parts of the country, this is a time where it's finally nice out and finally nice to go and look at homes on the block. So I think that's a part of it too.
So I read that there is $52 trillion worth of real estate asset valuation in the U.S. right now. That's a high figure, isn't it? What does that tell us if total asset valuation is booming, but existing home sales are not?
Yeah, we think that the order of operations here is really, listing prices to sales prices to home values. And so we can kind of get a sense of where things are going in home valuation data by looking at the market. And in terms of listing data, we're really seeing flat year over year change in terms of the median listing price on the market. Sales data show that the median sales price is still growing. Even in this March slowdown in terms of volume, the sale price rose on a year over year basis. So we expect that to kind of start to soften in the coming future. And then we will eventually see, that the change in values to our homes that happened is in the wake of the pandemic. The intense run up in home values and in median listing price is something that, was a shock and is something that we're still kind of recovering from. So getting into the new normal is going to be what we see in the coming months and years.
Live look at Marine One. Right now, we're watching President Trump as he's landing outside the White House. He just attended an event in Washington, D.C. Obviously, President Trump responding directly to the question earlier today, and he follows just about every economic angle you can imagine, Joel. The March numbers were not great. Is it expected to get worse? Are there any indicators to watch for as far as home sales go?
Yeah, the most important thing is mortgage rates. And with the uncertainty in the market right now, we're not seeing mortgage rates fall, even when the stock market has been struggling in recent weeks and months. We would expect to see that bring interest rates down, but that's not happening in a way that we expect. So I think that's going to remain an issue for affordability. In these high 6% ranges, it's going to be tough for people to get off the sidelines. And those are boosted by anticipation of future inflation, among other things. And I think the trade war that's being waged right now is really kind of shaking some people's expectations about what their money is going to be worth in the future, with huge tariffs being applied to goods from all over the world. So it's going to change the way that we kind of anticipate rates going forward. And I think that's going to continue to cause problems for people in being able to afford a home.
Where does the story go from here? What comes next? And guys like yourself, we talk about the spring season, but what do you watch for in the summer months and later on in the year?
Yeah, it'll be really interesting as we get into the kind of end of the year. We're pacing, as NAR showed in the March data, for a slightly slower year than 2024, which was itself the slowest sales year since 1996. So we're looking at the data right now. We're trailing a historically rough year in March in terms of existing home sales. So something's got to change if we're going to get the type of growth that people were anticipating in 2025. So something has to change in terms of mortgage rates, in terms of consumer confidence, to kind of ungum the gears of the market, because it's really being slowed down right now when people don't feel as confident as they did in years past, and people are not able to finance their homes at the kind of terms that they were getting in years past either.
Joel Berner is a senior economist at Realtor.com. Thanks, Joel.